Okay, now we are going to see the straight line method. There are many methods. We can follow the first start method, straight line method. Straight line method, depreciation is, let's say, 10%. Meaning that now you can find out the lifetime also, right? How many years? How? Total 100%, right? 100%. Now 1 year, how much depreciation? 10%. Then you can say 10 years. Lifetime is 10 years. We can find out anything, right? Basically, that is the idea that we have to get it now. 10 years we are going to use this particular motor. The lifetime is 10 years. Now how we are going to do the depreciation? That is an important point. Okay, when you look at the balance sheet, here, last I explained you the cost, accumulated depreciation and net book value. I have explained you. This is fixed assets, fixed assets or non-current assets. Okay. Now under that we have cost also, accumulated also, net book value also. Then how we are going to treat this one now? Okay, we'll take example. Motor is how much now? 40,000 debit side. We'll create the motor account. How much balance do we have? 40,000 debit side. Okay. Now we have to find out straight line method, or we can say another method, cost method. We can say another name is cost method or straight line method. Two things there. Okay, both the same. Now 10% out of $40,000. Then how we are going to calculate 40,000, 10%? It is $4,000 depreciation per year. Per year depreciation 4,000 mean value is decreasing. Value is decreasing by 4,000. If value is decreasing 4,000, what happened now? This motor value is become 36,000. Okay. For that, we are going to minus $4,000. Minus $4,000. When you want to minus, you have to keep it other side. Then only you can minus, no? That means motor amount is decreased by 4,000. That amount goes to another account that is called as depreciation account. Debit. Which depreciation? Motor depreciation account. Here credit, motor depreciation account, debit. You got this point, right? Okay, the motor value is decreasing by 4,000. When it's decreasing, that is loss for the company. The value decreasing means we are losing something. How much we are losing? 4,000. It goes to income statement. We are losing. Okay. Now, what is going to happen now here? Motor decreasing 4,000. Motor depreciation 4,000. We made double entry because each and every adjustment should have two entries, right? Okay. Now, if you write like this, this is correct. But accounting rules and regulation, if you follow the rules and regulation of accounting, this 4,000, if you write here, wrong. Because, as I said you, historical cost concept says always the cost should be same. You cannot change the cost value. Therefore, you cannot just change this 40,000. It should be 40,000 only. Now we see now, because the cost value here we have 40,000. This amount we are bring to here cost for the balance sheet. What we'll do? We balance both the side. 40,000, 40,000. When we bring to balance sheet, we say CD, BD. Now how much now? BD motor is 40,000. Then we can write here 40,000. What we should write? Motor. Okay. Now we cannot take this 4,000 here. For that we have to open another account that is called as accumulated depreciation account. Accumulated depreciation account. Accumulated depreciation account. Instead of motor account, we have to create the accumulated depreciation account. We are going to enter this value here. Now basically, what is the entry now? Motor depreciation account debit, accumulated depreciation account credit. Not, we cannot say motor account credit. Why? Because of historical cost concept. Right. Now here you can write depreciation. Here you can write accumulated depreciation. Now this 4,000 we are writing here. No, otherwise we should write here. No, meaning that this also goes to balance sheet. Then you bring this also to balance sheet. Now how we are going to balance now? 4,000, 4,000, then CD 4,000, then BD 4,000. Meaning that this is credit balance, it goes to liability. But now we are writing now assets. No, the liability when you are moving to asset side, we should minus 4,000. Then our book value will be 36,000. It is clear, right? 40,000 minus 4,000, 36,000. But we cannot write down here. Why? Because of the historical cost. Now motor depreciation we are going to move into where now? We are losing 4,000. No, it should goes to income statement. That is permanently we have to close the account. When you close the account permanently, IS motor depreciation account credit, it goes to income statement. Income statement under the expenses you can write motor depreciation $4,000. See now how we are adjusting the account, because if we have the straight line method.